Right, yo, good evening, everyone. Let's crack into it. So good to have you all with us this evening. Hopefully, you can hear me and see me. I can see such a wonderful stack of amazing names in the chat already. So good to have you all with us from tuning in from all over the country and also around the world. So, welcome, welcome. So good to have you all here, and I can tell you already, I am so fired up to be hanging out with a bunch of you this Sunday evening for our next live event. I'll get to that in a minute. But first off, just want to say a huge welcome to so many of our new team members that have gotten started in the last week. Yeah, massive welcome to you. So excited to have you with us. Whether you're joining live now or watching this replay later, just absolutely wrapped. You know, right down the day that you signed up and got started. I remember very clearly the 25th of June, 2 years ago, just being so aware of, felt like something significant, and I felt like documenting that moment. And so wife and I actually made a little selfie video. It was kind of funny, a little cute, just sitting on the couch. Just felt like it was something that we were going to look back on in the future. And sure enough, decided to record an update video 2 years later. And it has been the absolute ride of my life. So I want to encourage you, take this seriously, get your hope and expectation, your vision really high for what's possible in this space. The sky's the absolute limit. It all depends on the amount of energy and effort and focus that we put in here. But the rewards are massive, and the journey is real. There's ups and downs. But if you can find anything better, show me. The challenge is out there, and I've said that over and over again. But guys, just so excited for you that are brand new. Just give yourself grace. You're learning a brand new language. You're learning some new things. But anybody can learn to trade. It is like learning to drive. Initially, if to draw the analogy on learning to drive a manual, there's a clutch and a rearview mirror and an indicator and side mirrors, and then before you know it, you end up getting to places that you didn't even realize that you can't remember how you got there. But then what you begin to realize is that it all comes down to your mindset and learning how to drive yourself. And man, just been re-listening to Trading in the Zone this week for, I want to say, the third time. And man, something in chapter, I'm pretty sure it's chapter 3, is all about responsibility. It's pretty meaty. Whole lot in there about just being aware of our part of the equation, and then the next chapter is all about consistency. And there was this line in it that stuck out to me today, which was the solutions that we're looking for in trading are not in the market. The solution is actually internal, and the consistency that we bring is actually found in our mindset. And so the more we learn to really manage our own headspace, our own mental space and emotional space, the more successful we'll be in the charts. And man, just so excited for all of you that are brand new. I highly recommend Trading in the Zone by Mark Douglas if you have not read that or listened to that already. I know there's some free versions maybe floating around on Spotify or YouTube. I use Audible for everything, so I've got it locked in there. But yeah, that is the number one book that you want to have on lock for learning the mindset of trading. It is way less about technical analysis in that book and in general than you probably think right now. And it's far more about learning how to address every trade as a brand new one, and just realizing that each and every single opportunity that shows up is almost a statistical anomaly to the one before that. But it's so natural. There's this one line that also stuck out to me that Mario and I were talking about recently. It was a reel that he found and shared with me. And there was something in there around, what a bad mindset might feel like. And so the idea is you're in a winning trade, and a bad mindset would be you're feeling fearful that this is going to turn against you. And so you're in a winning trade, but your emotions are fearful that it's going to go against you. Likewise, when you're in a losing trade, you might be hopeful that it's going to go the other way. And it just shows how, I mean, if I'm speaking to anybody, you know what I'm talking about. But it's just those little things, like if that's your emotional state when you're in a trade or etc., when it's going with you or against you, then it's time to maybe take a step back and get back into the mindset side of this, which is obviously things like Trading in the Zone. Get back into that. Get on MMX, guys. The MMX Academy is absolutely loaded. It's 99 US bucks if you didn't know that, but it's free if you have an empowered pack. There's a dozen educators in there that teach live throughout the week, and they're dropping gold, especially Greg and Melanie Greeno. Just the mindset that it takes to win and get a high amount of clarity for your future, and to just dial up your focus. And so focus is a big thing. It's the number one thing that every billionaire says is the differentiator. Is that the word? The difference maker, and those that are able to actually get the thing done. And successful people focus on intention and ignore distraction, and there's a lot of distractions out there. And just thinking about that recently, I preached on it a week and a half ago. It's just this idea of knowing exactly what your lane is in the season, what your number one thing is, And to quote Tim Ferriss, there's this idea of domino goals where what's the one thing that if I get this right makes every other thing fall over and become easier or not even necessary? What's the one thing? And so in that regards, change your paradigm, change your life by Bob Proctor talks a lot about habits and things like that. And you're not going to change all of your habits at once. It's something that learning something brand new like this. For some of you, I know someone once encouraged me and said, like, man, the number one habit that I have learned so far, which I love, which got my money's worth, is that I'm getting up at 5 a.m. consistently to do this. And they thought for themselves that was a huge breakthrough. And so that in itself, getting up early, changing your sleeping habits, getting that more dialed in, maybe drinking more water, managing your caffeine, things like that. But be aware of the fact that you're not going to change everything at once. Otherwise, you might just burn yourself out. But just set yourself those incremental goals and things that you want to see changed over the next 3 months, 6 months, 9 months, and watch how a year from now you do not recognize yourself. So anyway, that is enough of that. Wow, welcome everyone else who's jumped in recently. So good to have you with us this evening. Let me think. Anything else? A few KIllshot updates. We are due for a very, very, very exciting update soon. Jay's scanner is going to be launching inside of the Academy very soon, just like every other strategy. It's been an absolute bonus for us to have it inside of TradingView in this time. So eventually when that drops, we're going to all about it. There's going to be some cool upgrades. I am not letting the date out the bag just yet. I'm going to wait for a few more updates to come through the right channels, but it is gonna be awesome, guys, and so get excited for that. And yeah, we'll keep you tuned. So if you're brand new, Jay has stopped taking requests right now to send it in the inside of TradingView. For now, we're just going to wait until it drops inside the Academy website, because honestly, in your first few weeks, you don't really need it. You got some foundations to watch, some boot camps to get into, and then but we'll have it very, very soon, so nothing to worry about. But this Sunday, do not forget, guys, if you have not already, click going, get off the fence, and encourage your guests to go and click going as well. Yeah, Damon and I were there today setting up some chairs, getting all ready and excited for what's coming. It is going to be an absolutely phenomenal evening. I guarantee it's going to be worth driving in for as well. 2 speakers, guys, 2 that have done phenomenally well for themselves. That one of them, you have no idea who they are, and you're going to be blown away by her story, what she's been able to achieve, all with IM in the last 3 years. And it's a story that's going to be seriously powerful and inspiring, and yeah, you're going to love it. And so bring some friends along, bring some guests along. This is not going to be a crazy nerdy training that's going to send friends and guests wondering what the heck's going on. There's going to be value, that's for sure, but we're designing this evening as it's a time for our community to get together, have some fun, maybe some cake or chocolate, I don't know what, but and then at the same time really begin to hear some stories that are very, very, very real, very local, which is cool too. And from there as well, take away some very practical things that we can apply to both the world of crypto and the world of trading. Those are the only 2 nuggets I'm letting out the bag for now, but it is going to be gold. So enough of that for now. This evening, we are blessed again to have Mike with us. He's on the road. He's actually, I believe, up here. So I don't think he's got his whole setup with him. So he might not have a camera, but he will be screen sharing. And so tonight, just want to give him space to share whatever he sees going on. I know we had NFP last weekend as well. So the charts went fireworks for us on the week, the end of the week. And so I might give some commentary on that. If you don't know what that is, non-farm payroll. If you're brand new, don't worry, it happens once a month. The charts go wild, to say the least. But I am going to give it over to you, bro, and let you take us away this evening. So blessed to have you here as always. If you're brand new and you do not know who Michael Jacobson is, this man has been trading for over 20 years. He was the vice president of another online trading university for a while, where he charged $5,000 plus US to teach people this stuff. So he saw what was possible through IM. He saw the leadership culture, saw the lower cost of entry for people to be able to help people, and so moved over here early last year, and has been dumping a ton of value on us ever since. And yeah, if you ever get the chance to meet him in person, get to one of our live events with him. There will be more in August. That's all I'm saying right now. But for now, bro, thanks so much for being with us. I know you don't have your camera, so I will just get myself out the way and give you screen sharing rights. And over to you guys. Drop some love in the chat for Mike as he takes us away this evening.
Awesome, Ty. Thanks. Hey, can you hear me okay?
Yeah, perfectly, bro. Thank you.
Brilliant. Okay, so I haven't got my normal microphone tonight, so hopefully it's going to be clear. And let me just share my screen. Right, get this out of the way. All right, hey, great to be here tonight. I'm on the road tonight. Was down in the South Island for about 9 days, and finishing off in Auckland, obviously school holidays as well. So family's on the road. And what I'd like to do tonight is just go over some recent trades. And I just want to look at a few different nuances that will help you see potential entries that will give you a foundation to hold for a longer period of time. Now, I know a lot of you are looking to get 20, 30, 40 pips a session, but every so often we get these nice setups that allow us to hold for a significant amount of time. And one of those was actually last night. Now, every time we approach the charts, we always want to look to the left. We want to see what the previous market structure was. And before we came to the charts last night, it looked something like this. As we looked left, we saw that price had rejected the top, come down here, rejected the bottom, and reversed all the way back up. So it's very, very obvious that this area here was an area of strong support. And if you look further to the left, you can see that it was also respected back here. But obviously, it's tried, and if you look, you can see a clear spike, 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 and unable to break lower. So every time we come to one of these levels, especially at the open of a session like last night in London or New York, that is definitely an area that we would not want to sell into. That's an area we would be looking for a reversal trade from. And this is the only time where you would not normally be having the 1 minute setup and the 15-minute setup trending together. So let's go down to a 5-hour chart, a 15-minute chart, and see what it looked like last night. Okay, so this is the same yellow line that we've drawn across the bottom for our support. Notice it is exactly to the tick that I've drawn it. And as we come into London Open, I'm also going to put something else on here. And for those of you who know, we've talked about it before. I will be doing hopefully another session on it soon with a bit more depth, and that's divergence. Now, we don't need this, but this helps us to understand that as price moves down into this support region, the selling will decrease at some point. And that's because people who have a lot of money, the smart money, they don't sell into these areas. If they want to be short, they are short a long time before you are short. They have sold a long time before you. Typically, when retail traders are buying or selling, they're typically late to the game. And so what happened is, as we came right into this area, the first thing that I'm going to point out, and then I'm going to take away the MACD, the first thing is that on the 15-minute chart, you can see that we make a first low in price with the low on the MACD, and then we make another low and another low on the MACD right at that exact yellow line, okay? So at that point, that moment we hit that yellow line, we want to begin looking for reversals. So we already have a lower low in price, but we have a higher low on the MACD, which is the momentum indicator. That's telling us that all of this selling pressure is potentially coming to an end, okay? And because the momentum indicator is saying, no, 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 I'm not going to go down anymore, I'm disagreeing with price. So at that point, we already know that 15-minute chart is diverging, and we can go down to the 5-minute chart as well. And what you'll notice is that we also have divergence on a 5-minute chart. I'm just going to remove all these lines and point that out. I'm going to keep that's our main line in there. You can see that we also have divergence on 5-minute chart. So higher, we have a valley here, and then we have a much higher valley, making us divergence. And then what you'll notice, and this is like a little bit extra, remove these lines again, we then have another divergence. Okay, now this might be a bit in depth, but I'm going to bring KIllshot into it, so it's okay. But what I want to point out is that we are at a place of strong support. Then we can go down to the 3-minute chart, and we're focusing right in on this yellow line now, which is that key level. And what do you notice? We have price snapping lower after our initial touch on the line. And now we have a 3-minute divergence. So we have a 3-minute, 5-minute, 50-minute, and I think we also have a 30-minute divergence. Let's have a look at that. There's also a 30-minute divergence, a wider time frame one. Now, we're going to go over this in the future, but I'm just helping you recognize that when price is lower, but the momentum indicator produces a higher valley or a lower mountain on the opposite side, this trend, the current downtrend, is weakening. Okay, so look, we have this 30-minute divergence, 50-minute divergence, 5-minute divergence, 3-minute divergence, and the 3-minute divergence is sort of where we're going to get our local context from. So here it is again, 3-minute divergence. Now, as you can see, we were probably having a downtrend on a 15-minute chart. All right, so if we go down to a 1-minute chart, as we approach our trading for the beginning of London session, this is what we're going to see. And we also have a 1-minute divergence. So we have 6 time frames with divergence. And if you don't understand divergence, that's okay. I am going to come simply back to KIllshot soon. When you approach your computer, which is right about here, 30 minutes before London Open, you have a sell signal. Should you take that sell signal? Well, I would recommend not. Firstly, because we have a red line here, which indicates our support. And we also know if we look back, if we look to the left on a higher time frame, we have higher time frame support. And that's why you should never ever just focus on this frame. You need to go out to a 1-hour chart. That's probably the best one. Look to the left and say, okay, is there any particular area in the past week or 2 weeks that has been strongly respected? And yes, we know this. So if we get a sell signal right in that zone, there's no way we're going to take it. The other thing we want to be aware of is that when we approach the market for trading at the open of a session, whether it's London Open or the New York Open, a lot of those market times are used purely for manipulation, and we often will get reversal trades. So this sell signal, if you look at it, everything looks great. We have a good angle on the 20 moving average. We have a fresh cross. The only thing that is not good is that we are coming down into support. But again, if we zoom out to a higher time frame, we know this is a big support. Okay, and then by adding the MACD, you don't have to do this. You can use simply the support by itself. But if you add the MACD, then you'll realize, wow, this is a place for potential strong bounce. So sure enough, we bounce again. The divergence is confirmed. Then we get the push up. Then we get our signal. So signal again is almost just at the 200 moving average. So we're not going to take this signal because it's a reversal signal, and it's into this previous high. So we're not going to take it in this signal. We're going to wait for a pullback and then a engulfing candle, the same way that Jay teaches. So we get a pullback, then we get this nice engulfing candle, which closes above the 238 moving average. Okay, that's the one we want. Now, this one closes above. You probably could have taken that one. I normally wait for a pullback and actually get a touch of the moving averages. So if you look here, this first pullback doesn't touch the moving averages. I actually want to see the moving averages touched and then trade the reversal candle. Okay, and sure enough, look at that. There's the touch, and then 2 candles later, the buyers step in. That candle closes above 38, giving us our signal. And I mean, obviously, there's only 8 pips to the bottom of that candle, and if you have a 20 pip stop, very, very safe. And then we absolutely tear away. Why do we tear away? Firstly, it's London Open, where we often get reversals. Secondly, it's at a massive area of support. Thirdly, we have 5 divergences confirming the trend is turning around. So this sort of a trade, yes, you can get a nice 30 pips out of it, and 30 pips was taken in about 15 minutes. However, it turned out to be bottom of the day. Okay, that was the bottom of the day. And so that particular trade to the high of the day was around 300 pips. So what you can do is, if you are approaching your trade session for the day, you do your analysis, you notice that we are in an area of strong support or resistance, then, and if it is the beginning of a session, you can have confidence to hold maybe part of that position, or maybe half the position, or something for a longer period of time, because this is when you can make extraordinary gains. Now, the other thing that we're going to look at is, again, if we look to the left, remember, we can also draw in trend lines. So if I take the indicator off, you'll notice a very nice pattern, price moving down here. What we want to look at is just the tops of this pattern, and we want to draw a line between the two most exterior points, and look what happens when price breaks that trend line. Okay, so we are in that trade just before the break of that trend line. Here's the break of the trend line on that big green candle, and that's actually the ultimate confirmation that this trend has turned around. Firstly, because we have broken this previous high, and secondly, we have actually broken the real trend. And the real trend is when you break the series of lower highs. Okay, so this is the trend line, which is holding this entire downtrend in place. Once that trend line is broken, then you get the averages turning around. We're now trading above the 238, and then this thing explodes to the moon. So one thing, let's just go back and have a look at, remove these lines again, just put on our baseline. This is the key support. Now notice that we hit it the first time. This was at 6 p.m. This is 2 hours before London Open. So there's a lot of buying in here, but people who have bought there will have to put their stops somewhere. Where would you put your stops? If you were buying, I'll just remove these lines again. If you were buying, hang on. If you were a buyer anywhere in this region, where would you put your stop? Well, again, the only rational place is below the lowest low, because we know that's where price was already rejected from. So when London opens up, or actually it's about 30 minutes before London opens up, you get this sharp push lower. Now, this is before the actual open. And so when you get a rapid move in one direction before the actual open at 8 o'clock, or 8 p.m. New Zealand time, 8 a.m. London time, if it is into a support area or resistance area, it is often a stop hunt. So the big players are targeting all the millions and millions of dollars down here below this low, and they are tricking all the retail traders into selling, and then they buy, and then the price just rejects straight from that level. So it was actually, this is a big stop hunt, and that's because that's where all the money is. And there's also, if we zoom out, if we look back at the origin of this support, this is the price here. There are a lot of larger players who have bought all the way through here, here, here. They've been buying, and they do not want their positions to be liquidated. So they are protecting. They have a barrier at this level. It's what we call if you're trading options, it's called an options barrier. They do not want price to go through that level. If it does, they lose a lot of money. So in one instance, you have a lot of people protecting this area. At the same time, you have a lot of rookie traders who have their stops under this area. And that's why we've got such a strong rejection from there. So what I want to tie in there is support, resistance, market structure, always look to the left, and market opens. That's when the price moves. That's when we see a lot of manipulation, And if we have divergence at a market open, you often have a very, very strong move in the opposite direction for the rest of the session. Now I just have a trade on here. It's up. All right, that's still going. Okay, so we've just had the market open about 30 minutes ago. Now let's put on our MACD. In fact, let's look to the left first. So if we look to the left, what stands out to you? Well, only thing that stands out to me is this here and this here. Okay, those are the two obvious levels. So what I did earlier, and this here is known as a V reversal. So it goes straight up or straight down. It's actually upside down V, but it's called a V reversal. Now, often I will put a line at the top, and I'll also put a zone there. It's a very, very arbitrary zone, but typically in this area at the top here, there is a lot of selling pressure. And so often when price comes into that zone, not necessarily the very top, but when it comes into that zone, there is a lot of selling, and it's typically very, very hard to break through that level on the first push. And that's why I put that zone there. And sure enough, we basically came into that zone. Now, why was I looking for a sell here? If we put on the MACD on a 15-minute chart, then I'm going to come to the question soon. What do you see on the 15-minute chart? Who can tell me what we see on the on the MACD? Jeff, divergence, nice work. Exactly. So we have our first push higher in price. That was last night in New York. And then notice that as price makes a higher high, we make a lower high on the MACD. And let's just come back to the 5-minute chart and see. All right, I'm just watching this trade. So we have divergence of opinions. So again, it's the market open. We have divergence into a key level. This is what we call a supply level, where there's a lot of people willing to sell, and we get a rejection. So we go to the 5-minute chart. Yes, there was also divergence on a 5-minute chart. There's our divergence there. And after we've made this high, let's just remove all of these lines, go down to the 1-minute chart. Here's the top. After we make that divergence, and then look at price rollover, produce our signal, there's our pullback into the moving averages, bearish engulfing, and there's your trade, and you're finished for the day. Now, I actually came to the table a little bit late tonight. Just had a late dinner. I entered somewhere in there, and we're still short. But if you entered on that engulfing candle there, you had zero drawdown on the trade, and there was only 10 pips to the top of that candle. I'm just going to zoom in there so you can see it a bit more clearly. This is the candle we're looking at, the red one. It completely engulfs the previous candle, and it rejects the moving averages after the sell signal. And again, the only reason that I would take this reversal trade, even though it is into the moving average, the 238, is because we have divergence in a higher time frame, and we've rejected that resistance area. And you know, it's a pretty good trade from there. It's about 63 pips in the last hour. So we're going to cover divergence a bit more at a later date, but you can see clearly that we have price going higher and the MACD going lower. And the key is it is into an area of strong resistance, and we have to get a rejection. It just has to happen. All right, we'll let that run for a bit and see what happens. Okay, then there's another trade that we're going to look at. But first, let me just answer the questions. Sorry, I missed a bunch of questions here. Okay, so first, Kat, I looked at the 60-minute, then I looked at the 15-minute. and the 5 and the 1. Often I'll start at a higher time frame and work down just to get a good top-down approach. All right. Yeah, brilliant, Zeph. It's a 0-0 level, so it's a big number level. 34,000. Let's just zoom in and check that out. Brilliant spotting. It's amazing. Well done. So 34,000, and you can see how price rejected that level. 1,000 number and 100 number, huge in trading. And that's why my take profit is down here at 33,900. And if you look to the left, you'll see, look at this area here. We had a big war last night trying to break through this level. I got chopped up once, but that's going to be an area that I will want to take my profit out. And if you put a line on there, you can see very, very clearly that it's strong support. And that's right just below the 33,900. So we're heading down there. I'm going to put alert on that. So when we get close, I will just see how price reacts and take out some profit. Now, we're going to go back and look at another amazing trade that happened on Friday with non-farm payroll. So this is the employment news. Now, the employment data is the biggest mover apart from interest rates in any market because it tells you how strong a country is. And obviously, if you have a strong country, a strong economy, there's a lot of jobs being created. That is a country worth investing in. So you get a lot of foreign investment, and the prices within that country will go up, and the currency will have a stronger value typically, which means people want to invest more in it. More money comes to the country, it becomes more productive, it becomes wealthy because money's coming in. So more jobs is a good thing. And whenever you have the release of how many jobs were created for the previous month, it typically creates a lot of movement in the markets. So if you are approaching your chart, the chart looks like this. So what stands out to me? Well, I want to obviously mark out this low here. Okay, this happened on the previous day. On Thursday, it was the low of the day. Now, the low of the day and the high of the day are the most important levels on a chart. Obviously, we also put in POC on our chart, but the high of the day and the low of the day are more significant than the POC because that's just how it is. It's just super, super important. A lot of formulas are derived of the high of the day, the low of the day. It indicates trend on higher time frames. It indicates a lot of things. The low of the day. That's the most important thing. Why do I know that? Well, firstly, because anyone who was a buyer for the rest of that day, if you were conservative, you had your stops below that level. That's where the stops would be. So we want to mark that level right there. And so if you are trading the news, if we get a strong move into this area, absolutely, we are looking for some sort of reversal out of that with divergence and possibly with a kill shot entry. So what happened at non-farm payrolls? Well, of course, they took out all the stops because remember, when we get sharp, rapid moves into previous strong support or resistance areas, it is a false move to clear out all the money and take the trade in the opposite direction. So this is what it looked like on a 5-minute chart. Now, for those of you who have been looking at divergence, you will see that we had extremely good divergence on the 50-minute chart. Okay, this is called a Class A divergence. Now, if you don't know, it's okay. We will cover it again. Very, very steep divergence, which means the momentum, this move down is basically a false move because the momentum is so high compared to where it was back here. So divergence everywhere. Let's go down to a lower time frame and see what happened on the kill shot indicator and see what it looked like. Okay, here we go. So this is when the news comes out. There's our level. I'll just remove this line here, this line here. And what else do you notice when we pierce this level on the 1-minute chart? I know that Zeph will know this. Jeff will know this. What happens when we penetrate that level there? Divergence. So this is when the news comes out. The news comes out right on that little reversal candle. Now, when you get a candle like that, I think the cheat sheet that most of you will have on trading patterns, we have candlestick patterns. This is the reversal candle. When you see one of these at a key level, tells you price will reverse with about 80 to 90% probability. So we have divergence, we have a reversal candle, and then we have an explosion in price. Now, there are alternative ways to trade this, because in 4 candles, you made 130 pips in 4 minutes, or 3 minutes, 130 pips. I'm not going to teach how to trade this now because it's a bit more advanced, but what I will say briefly, for those of you who already have a bit more time in the academy and a bit more understanding, the moment price triggers this yellow line, you buy with a 20 pip stop and an open take profit. If you have divergence and the market breaks down to this level and pierces it, you buy at market, which means you just press buy the moment right there. The moment price breaks that level, buy with a 20 pip stop, and then you have an open take profit. And if you held it for 2 minutes, 3 minutes, you're up 130 pips. Actually, more than that. You're up, 130 pips. Okay, that's what I'm going to say. But you buy with divergence at market. So on KIllshot, once you get a move down and then the reversal or the rejection from that level, remember we have divergence on a higher time frame, then we are simply looking for a buy for the rest of the session, okay? Because often the employment news, which comes out once every month, will often be the high or low of that day. And it often will swing in 2 directions. If you get the initial push down, often the market will trend upwards for the rest of the day. If the initial move is up, often the market will trend down for the rest of the day. So we've noticed here that the initial push is down into that strong resistance area, and now it's gone up. So in this situation, we're only going to take buy signals that correspond with our rules, and hopefully we're going to run it up for the rest of the day. So we have our first buy signal over here. We do not take this buy signal because it is on a red candle. It is also into previous resistance. We do not buy that. Sure enough, it comes back. We do not get a bullish engulfing candle as price pulls back even more. We do get a nice reversal candle here. Definitely a buy. But notice that we're going to get stopped out of that one. We're going to get stopped out. And we're actually going to get stopped out of 2 of these. One, we're going to lose on that one. We're not going to take the sell. Look how the moving averages are in a straight line. Okay, all the averages in a straight line, which indicates a range. They're almost horizontal. The blue one, we're not going to take this one because there's no angle on the 20 moving A. Very, very flat angle. We're not going to take that trade. We're not going to take this blue trade because there's no angle on the 20 moving average. But sure enough, as we're patient, we finally get the break we're looking for. And this moving average has angle. It's also a super trade. Now, who knows why it's a super trade? Just put it in the chat. Why is it a super trade? Is it a dragonfly doji? Yes, something like that, Zeph. Yep. I'm not sure what it's called, but I just call it a reversal candle. Exactly, Kat. Well done. All EMA cross. Yep, above the 238. Yep, perfect. 20 and 50 cross over the 238. So now we have not taken either of these 2 trades because they do not fit the criteria. We finally get the beautiful trade. It's a super trade. And again, we want to look at patterns. Now look what happens. Price has broken out of this pattern that it has been contracting in for the past hour and a half. And when it breaks out, look what happens. It comes back and tests the moving average, bang. And it tests the top of the pattern break, and that's the launch into infinity. You know, it was a brilliant trade. It just went on forever. So that's the beauty of learning to trade the news, is that often you will get a big trend day. So for example, if we bought on the signal, let's just have a look at that. You can buy this on the signal because the candle actually on the, you wouldn't have bought that one, you would have bought the second one. Now the blue signal is on this candle, but notice how we are buying right into resistance. See the green line here? So what you want to wait for, you have two options. The first one is to wait for the next candle, this big one here, okay? That closes above your resistance. Okay, so that's your first entry on that candle. The more conservative entry, well, actually not conservative, but the alternative entry is to wait for the pullback in the moving average touch or engulfing pattern. I prefer the touch myself because it gives you a much better stop. So pullback for the touch, if you have an enter on the touch of the 20 moving average, and you had, 20 pip stop, that thing, and you just let it run, because it's a trend day. It's employment data. Often you get these big moves. And again, often when you get a break out of a consolidation pattern, remember, price is contracting. So the market will contract and get squeezed, all the energy gets squeezed up, and it has to go somewhere. If it goes up, often it just goes up. If it goes down, it explodes down. Okay, so as you can see, price is contracting, it's getting squeezed tighter and tighter and tighter and tighter. And then finally we get a breakout of that. We wait for a confirmation with our signal, and it's a great trade. So that was an awesome trade. Okay, yes, Kat, so typically, I mean, there's probably a million different views on trend lines with traders around the world, but technically the best one is to trade from the top of wicks, because that actually was a place where price went to. Some traders will use the base of the candle, but I don't believe that's real, because it was simply the close of the candle. It wasn't the entire range of that candle. So when you see a candle like the low of a candle, for example, let's just remove all these drawings. If you see this candle and the low of that wick there, price actually got there. So that is actually an historic price level that has been printed. Some traders will, they will draw the trend lines to the base of the candle. I don't believe that's accurate, because yes, that's where the close was. Sorry, that's where the open was, but this is the entire history of price. Like, that candle is there for a reason, because that's where price actually made its footprint. So that's why and my mentors have always also taught me to trade the wicks, and I believe that's a very good reason for that. Is there a specific way to put an endless TP? Yes, so basically, you don't have to move your TP at all, Lisa. You can just simply leave it. Okay, so there's price moving down. Let's just pop on my position. Right, so look at that. It's broken through that support, big red candle. Let's see what happens now. So if you took the initial sell signal right at the top here, which I did not because I was a bit late, 20 pip stop. This is currently up about 5 to 1. It's a good trade. So now what we can do, and again, why is this dropping so good? Well, it was divergence into the key level. Okay, and remember, I told you there's a lot of supply up in this V reversal, and very steep divergence. And for those of you guys who are learning to recognize your divergence, this is a class A divergence, very pronounced, very steep. and that's why this thing is dropping. Now, the other thing we can do, again, if we are already in a position, we can, again, put a trend line on, and if we violate that trend line, that can also be an indication that price will keep moving lower. So there's our most important place to put it because it was the base of this move. We're then going to put it to the next most important swing low, which is right there. And as you can see, once we've broken that trend line, it's lights out. The trend is just reversed completely. So let's put that down here. I'm putting that stop loss there because this is the next area where price will possibly pause from. Okay, you can see it's rejected twice there. That's the area of interest. And let's go, and the other trade is up as well. That's on the NAS. So the NAS did the same thing. Let's just go to a 50-minute chart. Notice how, okay, let's just go to a 5-minute chart to make it simple and just take the indicator off. So as you approach your trading for the day, what stands out to you about this chart here on the right? Well, it should be this high level here. That was the high of yesterday, okay? A lot of money above that level, a lot of stops. So in London, what happens is we come up, we hit all those stops. It takes a while. It takes about 5, 10, 15, 20, about an hour. And we reverse. And notice that we have divergence when that takes place. And again, if you, and this is a very, very simple strategy that I was taught. If you open your computer and you add resistance, strong resistance, you should look to sell. If you approach your computer and you are at an area of strong support, you should look for a buy setup. So when I opened my computer, this was at this resistance and we had failed to break above it. Here's our sell signal. Here's the pullback to our averages. There's our entry. And the NAS is up. And some of you might be on this trade. Is anyone short on this trade? It's up about 35 pips there. Is anyone short on either of these? Okay, Kathy, it has to be on market. Okay, so sorry, yep, sorry, Kathy. So so on market means basically you don't use an entry. You don't use an automatic entry. So for example, I can set a sell or a buy. So I can come down here and say when price comes down here, I want to buy. So I can go limit, or why is that not working? You can set a limit order, which I don't normally do, or you can just click buy. So when I say at market, it means you basically just click buy. You don't actually set an automatic order for some time in the future. You're watching it manually, and the moment price, let's say it was this level here, the moment price breaks this level, your finger's on the trigger and you just go buy, click. There's no automatic order entry that's been sitting there in the market beforehand. So that's what it means to buy something at market, which means in the very moment. In the very moment. Okay, so if you traded the NAS, if you entered short here on the pullback, we should not have got stopped out of this one because there's no drawdown on the trade. The moment you enter short here, either on the sell signal or the pullback, there's zero drawdown. So for example, if you enter on the moving average, the price goes 2 pips against you, then just drops away. Okay, so signal, we don't take it because it's into the support. Wait for a pullback into the moving averages. You also have a bearish engulfing there. Okay, this red candle engulfs the previous candle and then it collapses. So there's no way we should have got stopped out of that one. Let's come across to this one here. And again, the temptation is to enter the trade early. The same thing on this one here. So price gives us our signal. We do not sell at market because it's a green candle and it's right on the 238. Okay, no sell. We want to wait for the pullback. And then this trade again, there's your entry on the touch of moving average, or there's your entry on a close of that bearish engulfing, and price immediately drops away. So we shouldn't have got stopped out of either of these if we follow those rules exactly. All right, so the thing's dropping away, but great question. Yeah, so often we get stopped out because we enter too late or too early, and sometimes it's just as simple as that. So 2 good trades, okay, moving down very, very quick. And now what I've noticed with these 15-minute divergences is they often go for at least 100 pips. If you look at the one from last night, this one here, it went up for 300. So here's the divergence here from last night. It went up for 300 pips. So notice that we're now dropping like a rock. It could be possible head and shoulders. I'll look at that shortly. But we are smashing this. Okay, so it's down. It's down. We're up 84 pips on that position, so it's a goodie. Let's see it come into that level, and that will be nice. But before it does that, let's just look at what Ty is saying. Now I'm just going to take that out there. That'll do. All right, 84 pips. Okay, so if we come back and let's just take the indicator off, and let's go to a higher time frame. Let's go to a 4-hour chart. Okay, so if you look at the 4-hour chart, what you can see now is, let's put that same line on that we're looking at. Okay. Now, if you take this line even further back in time, remember, this is where we had amazing trade from. This is what started it. You can see that this has been a key level. We had a bit of a rejection around this area here. Look at the rejection there. I guarantee you there's an amazing divergence right at that level. And look at this. Rejection here, rejection here, rejection. So this is one of those key levels, big rejection here, that we've talked about for a while. And if we come down again, absolutely, we want to look for a possible reversal again. Now, what Ty is suggesting, and this is something that could be playing out, is what we call a head and shoulders pattern that is inverted. Now, head and shoulders pattern is a reversal pattern. If the market is going up, it will often produce a left shoulder, a head, and a right shoulder. Now, this probably looks like, you know, Casper the Lucky Ghost or something, you know. But you can see clearly left shoulder, right shoulder, and head. But in a market that's going up, it will be converse. You'll have the left shoulder, sorry, it will be inverted, and then the head, and then the right shoulder. And then the market will often reverse. So we can possibly see the left shoulder here, the head, and possibly a right shoulder forming here. And then if this pattern breaks, we could potentially see a large move up. So how do we know when it breaks? Well, the confirmation of a head and shoulders pattern, I know some of you will have it on your walls, you will have it on cheat sheets, and that's the neckline. Now the neckline is the point where the head begins on both sides. So we're going to draw the neckline across there. That is your neckline. Okay, so shoulder, head, and if we get a shoulder here, let's say price comes down and rejects back up. If we get a break of that neckline, that is one of the best possible places you can buy in the market, because it often leads to a massive run. And again, this entire area of price is simply price contracting and buyers entering the market waiting for the next push higher. Okay, so that's what it looks like. So I'm going to leave it there tonight because we've only got 3 minutes left. I'm not going to take all your night. I'm on family with my holiday. I'm on holiday with my family. It was an early morning this morning. I'm on holiday. I'm on holiday with my family, and I hope you guys get some amazing value out of that. And yeah, I look forward to seeing you guys next week.
Bro, so much value. Thank you. Let me figure out what I'm doing. Yeah,
Yeah.
that, dude, that was outstanding. Like absolutely outstanding. Who did I just removed you? I added me. Hang on. There we go. We're good. Zoom controls. Oh, I think I'd have the hang of it by now. Bro, thank you. Page full of notes. Just, I hope you guys were writing that down or rewatch this. That how to trade NFP. Sheesh. A few of us have heard you say that before, but yeah, those who want to stay awake for it, bet you're gonna do it next time now. But once a month, that shows up every month, and yeah, when you can spot that stop hunt with divergence, etc. Man, Mike, thank you so much value tonight. Just breaking down kill shot signals, divergence patterns, really fun. Guys, drop some love and appreciation for him on holiday with the fam, still jumping on here to give us a ton of gold right there. But watch, guys, watch for that neckline. We'll see what happens from here. It looks like it's bounced off that level a little bit on the 15-minute charts, currently looking like a bit of a reversal candle with 2 minutes to go. So who knows? We'll see what happens. But guys, once again, thanks for tuning in with us tonight, or if you're watching the replay, reach out if you got questions. And this Sunday night, cannot wait to see you guys. It's going to be an absolute blast. For those of you who are within driving distance of Auckland, same place, 7:30 Sunday night. It's going to be an absolute blast to get together, hear some very fresh, very powerful stories of people that have cracked 7 figures in this space in 3 years. So if you want that to be your story, my suggestion is get as close to those that have done it. And yeah, the way we do this, guys, is learning from each other's mistakes. You can learn from mistakes, or you can learn from mentors. So in this environment, we have a stack of mentors. So once again, Mike, thanks so much for your time this evening. Everybody else, hope you have an amazing rest of your week, and go get on that Facebook event for Sunday night. Click going and click invite and bring some people along. They're going to have their minds blown, and yeah, it's going to be a lot of fun. So I'll leave it with that. Enjoy the rest of your evening, trade safe, and we'll see you guys all in the chat. All right, see you guys. Good night.